Everybody see that one? Yep. Excellent. Cool. So does fringe benefits tax apply to your business? So I know Tanya's presentation rolled through quite quickly and there was a lot to take in on that. So I want to just take a step back for 20 minutes and go a little bit slower and see whether there's some aspects of your business that where fringe benefits may apply and work out whether you do need to do a fringe benefits tax return or not. So the fringe benefits tax return year runs from April until March. And the reason why they do that is because on your payment summary at the end of the financial year at June, you need to report what the value of those reportable fringe benefits tax amounts are on the group certificate. What was the group certificate, what was the payment summary is now a single touch payroll report. So you need to do the fringe benefits tax return and have those numbers before the payment summaries go out at the 30th of June. So that's why the fringe benefits tax year is a different year. So what we've got is a number of different things that fringe benefits tax might apply to. So there's motor vehicles, there's payments made on behalf of employees. So when it comes to what Tanya was talking about, if you're salary packaging a vehicle, we're making expense payments on behalf of our employees by paying the fuel, by paying the rego, by paying the insurance on that car. So that would be an expense benefit. So private expenses, fuel and oil, subscriptions, rent on accommodation, private telephone, restaurants, meals, anything like that. Loans to employees, waiving debts, so giving an employee a loan and then telling them a year later, don't worry about paying that back, that's a fringe benefit. Entertainment, housing, board, car parking, living away from home allowances, property, so we'll talk about that, other benefits. So there's quite a few different areas of which fringe benefits falls into, and it's all around knowing what the question is asking so that you can answer it correctly. So the first question is around motor vehicles. Actually, before I do that, I'm just going to highlight this bit here. So fringe benefits tax applies to your employees, but it also applies to directors and associates of companies as well. So if you are a director of a company and you receive a company car, but you're not on the books as payroll, then this would still apply to you. So is it in relation to the employee relationship that you have, even though you may not physically be on the books as payroll? So director is an important, or director or associate. So you could be the wife of the director of a company receiving a company car. That may still apply in your situation to have fringe benefits tax on it. Okay, so fringe benefits tax for motor vehicles. The big thing with motor vehicles is the word car. So if you're providing a work trade vehicle, so a ute or a van that's kitted out with all the tools and the toolboxes and the ladders and all of the things that you need to do the work of the business, then fringe benefits tax won't apply to a trade vehicle. It does apply to a car. And there's a whole load of information out there. I normally just do a Google search on the ATO website about whether a car is a fringe benefits tax or not a fringe benefits tax car. So what we're looking for is how many seats, how many people does it hold, what carrying capacity, so carries less than 1 ton, and what is it designed for. So generally your normal Prados and Land Cruisers are classed as cars, even if they're kitted out with all the mine specs and stuff like that. It's defined as a car because that's the type of vehicle it is. So the way to get around FBT on cars is to not buy a car. So I like that one. So doesn't apply to motorbikes either. So motorbikes are excluded. So if you provide a car to an employee for private use, then it will probably be subject to fringe benefits tax. So private use is included, or does include, driving to and from work, even if that's the only private use that they have. So driving to and from work, and then the private use of the car is only from the garage to the workplace, and that's it, and then it's used for work every other time, still classed as private use. So it's important to make sure you know those two distinctions. Number one, a car. Number two, private use is home to work. So that's motor vehicles. That's the high level stuff I wanted to talk about on that one. Expenses paid on behalf of employees. So the but for on the expenses paid on behalf of the employees is but for if it would be tax deductible in their own name. So when they go to do their tax return, if they could claim it, then you don't have to pay fringe benefits tax on it. So a couple of examples are union fees. So if you're paying for union fees on behalf of your employees, normally when they come to do their tax return, if they've paid their union fees, they can claim it as a tax deduction. So when it comes to do the fringe benefits tax, it's called an otherwise deductible. And so it's not claimable, it's not fringe benefits tax payable for you if you've paid that, and they can claim it. So Peter said yesterday in tax training that the tax office is really going to start to come down on us in regards to telephone and things like that. So really looking at that difference between private use and business use. And you may be better off giving an allowance to your employees and letting them claim it as a tax deduction rather than you paying for a private use cost and then having to pay fringe benefits tax on it. Anything else for expenses? No. Okay, loans to employees. So you can absolutely loan money to employees, but document the hell out of it. And if you charge interest, then it may not fall within the FBT rules if it's a documented loan. I don't condone giving money to employees because you never know what happens. So it's not generally one that anybody says yes to. But if you do have a loan and it is then waived, so you don't ask for that money back, then that is definitely fringe benefits tax. So C and D go hand in hand. E is my favourite, which is entertainment. Entertainment is just as complicated as housing when it comes in remote area. So entertainment is generally providing alcohol, generally. If there's a broad brush, that's one of them that I can run. Out of hours, out of work hours, out of work premises, and generally more substantial meals than just finger food or a lunch provided for a staff training or something like that. So entertainment is really around if you're providing an entertainment, I'm using the same word, that's not very good. If you're providing some form of entertainment for your employees, then there may be fringe benefits tax on that. Yet again, there's always exceptions to the rules. So a Christmas party at a restaurant where you're providing alcohol outside of work hours will generally fit into that entertainment category. And it's something that happens for most employers. However, there's always a however with FBT. There's special rules in relation to Christmas parties, and there's special rules where if it's under a certain dollar amount per employee, then it can be exempt. Then I think from memory, it's $100 per person for our Christmas parties. So it's quite a good Christmas party if you can spend that much. So what happens with entertainment is there's a whole load of rules around whether you can claim the GST on it or not, whether you have to pay FBT on it or not. So there's a really good checklist with the tax office website that you can use to figure out if your type of entertainment does have fringe benefits tax on it. And sometimes what we do is we just say, you know what, it's better off to pay for that entertainment out of your own pocket rather than put it through the business and have to deal with all the rigmarole of fringe benefits tax and whether it can or can't claim GST and stuff like that. Yet again, it depends how much it is, and it depends on how often it is, because it may just then fall out of the infrequent rules. So yeah, lots and lots. So complicated. Entertainment is so complicated. Housing. Housing's one where we get really stuck in the Pilbara. So we get remote area housing exemptions in specific circumstances where it's 100% exempt from FBT. Then there's some circumstances where it's 50% exempt from FBT. And then if you're not in a remote area, if you're providing housing, then you may be paying fringe benefits tax on that as well. So a quick little rundown. And this could be different to advice I've given to clients in the past, which is really scary, but it's so complicated. Essentially, if the business owns the house that the employee is living in, then there'll be no fringe benefits tax. But if there's rent being paid in some way, shape or form, then it probably falls under the 50% exemption rules. So if you're paying rent of $600 a week, then there may be fringe benefits tax of 50% of that, which is where Maxia comes in. And if you salary package it properly through the salary packaging company, they can deal with the fringe benefits tax through what's taken out of the employee's wages. And so when it comes to doing the FBT return, there's no actual tax to pay that you're out of pocket for, because the employee has taken it out of their pay and held it aside for you. So that's where the benefit of having Maxia for salary packaging really comes into its own, because they, like you saw on the presentation, that big flow chart, they run through what's eligible, where it fits in the housing criteria. Is it a 50%? Is it 100% exempt? Or do you have to pay fringe benefits tax on it? And then they work with the employee to figure out what's the best amount to be salary packaged for you, the employer, and for the employee as well. So yeah, so some of my advice in the past 20 years of living in the Pilbara may have been incorrect, but now it's like, well, let's look at it properly on a case-by-case basis, on an employee-by-employee basis, because there's so many different combinations. So the company can rent a house for an employee. The employee can rent a house and then salary package it. The company can own a house and provide it. So lots of different scenarios. So lots of different tax complications. Board. So board is where you're providing accommodation or meals to an employee as a result of their entitlement under an industrial award or an employment agreement. So this will generally fall in with the camps. So if you're getting one of your employees to live at one of the camps to do work remotely, then this may come up. But going down and skipping car parking, because we don't pay for car parking in Karratha, the living away from home allowance may override some of the board stuff. So living away from home allowance is where you're paying an allowance to somebody for the additional cost of them living away from home. So having to pay 2 lots of rent or a mortgage and a rent, having to pay 2 lots of family costs, meals, all of those sorts of things. So yet again, there's a whole load of information behind just this simple question around, are you paying for accommodation? Are you paying for meals? Are you paying for, so you live in a sucky area? Thank you very much. Because there's thresholds associated with each of those, and especially meals in relation to living away from home allowance. And meals comes with how many people are we feeding, which is how many adults and how many children, and you get a specific dollar amount per person. So it can be really quite complicated to work out whether you're paying a tax-free amount, because some of the living away from home allowance is tax-free and some of it isn't. So we try and encourage you to get the right advice and pay a tax-free living away from home allowance, which means it's exempt from fringe benefits tax. J is property provided to employees. So this is where you're a business who can give things to their employees. So as an accounting firm doing tax returns, letting the employees do their tax returns for free or at a discount would be property provided to employees. And you're like, well, it's not property, it's not land. Property in this sense is things, so goods or services. So if you are just jeans, for example, and you say, here's a pair of jeans, you need to wear them this week, and then next week, here's another pair of jeans, you need to wear them. Every amount that's added up needs to be recorded and calculated, because there may be fringe benefits tax on that. And then I love the all-encompassing K, which is other. So what else have you provided on a non-cash basis, which has not been noted in any of the other questions above? So it could be anything from electricity. So in amongst the housing stuff with remote area, you can pay electricity. So it could be that you're paying. I'm going to stop the share for a second. It could be that you're providing for a course for somebody to go on. Now that would be otherwise deductible, but still worth putting down as an other benefit to make sure that we're picking up everything you're providing from a non-cash point of view. So it is really, really complicated FBT, and the one-pager yes/no checklist can seem quite daunting.